Hello. We're joined today by Alexander Malaket, who is the president of Opus Advisory Services International, and David Henner, who's head of product management for trade finance and supply chain finance at Misys. Gentlemen, welcome.
Hi.
You've been conducting research into the trade finance and supply chain finance and what the drivers are for that industry. I wanted to ask you a few questions. So first off, what are the key strategic considerations that banks have when they look to expand their trade finance offering in this market? And perhaps I can talk to you, David, first.
Okay, I think trade finance, or perhaps more generically in recent years, transaction banking has kind of come back into fashion to the extent that banks want to invest in it. Because all banks are investing in it, it's become a very competitive market. There's a lot of pressure on cost and on margins, so that's one consideration. At the same time, there is a demand to bring new products and services into market, particularly for supply chain finance. Plus the banks are at the same time are having to cope with all of the increasing demands of regulatory compliance, which again is presenting quite a challenge, particularly in the context of AML and KYC, for example. So if I had to pick three things out, I think it would be those.
Are they similar considerations that you think banks are looking at?
I would broadly concur, Edward. I mean, those are certainly themes that we hear on a recurring basis around trade finance and supply chain finance, or what's also been referred to as financial supply chain management, which is meant to be the broader category. There are some fairly fundamental issues around this business as well. If I focus it down from transaction banking into the trade space specifically, one of the things that's happened post-crisis is this raising of awareness around the importance of trade finance. So 90% of global trade flows require some kind of financing or risk mitigation support to enable that trade flow to take place. And at all levels today, whether we talk about commercial levels, whether we talk about political levels, whether we talk about even in the academic spheres, there's a realization of the importance of trade finance underpinning all of this activity as we all look at trade as one way of driving the global recovery. So in terms of the bank's strategic priorities and their need to focus on this, it's initially based on that raising of profile around trade finance and some positioning that they need to do relative to their value proposition, relative to their level of commitment to the business, and quite frankly, to echo David's point, the notion of differentiation and the propositions they offer to their clients. Banks consistently talk about the need to be client-centric, and I think this is the point at which the talk has to be delivered against, and we're starting to see some evidence in that respect.
Let's turn to the research now. In the recently conducted survey into trade finance in Middle East and North Africa, what are the key takeaways that you found from what banks are doing that meet the challenges in that market? And also, additionally, what technology challenge are they facing that they have to overcome or meet so that they can continue to provide and expand the services they provide their clients?
Right. Well, Edward, I think I'll defer the technology part of the question to David for obvious reasons. In terms of the conversations we've had up to this point, and in terms of some of the analysis that we've applied against them, the Middle East North Africa region has a long history of I guess I would call an affinity to established trade finance products. They like using letters of credit. They're comfortable with document flow. And so there's this kind of perception backed by quantitative data that there is a kind of a critical mass of still letter of credit type business, traditional trade finance business in the region. However, I think one of the things that is interesting to watch is a cautious shift, I guess, a careful shift to other mechanisms. So recently there was an international ICC, International Chamber of Commerce event around the bank payment obligation here in the region, got very good coverage. The response was very positive. In our discussions even here this week, there's a sense that businesses and banks locally are looking at open account, they're looking at other ways of doing business in the trade space, they're looking at supply chain value propositions. So there's definitely this kind of forward-looking I won't call it a momentum yet, but let's call it a tendency that I think is observable and is notable as far as some specific local and regional trends or developments.
Yeah, I think on a global scale, reference is often made to the fact that 82% of world trade is now conducted on open account compared to 18% on traditional letters of credit. But of course, those statistics do vary by region, and certain regions of the world continue to be married to traditional practices to a greater extent than others. and I think that's particularly true in Asia and also in the Middle East region. But by the same token, we have seen Asia leading the way now in the adoption of a new market practice in terms of the BPO. And I think recent evidence now suggests that that trend is gradually moving westwards, as things often do. And of course, Octal in Oman was one of the first corporates to adopt the BPO, and now we're hearing about Dubai Trade as well. So I suspect that as the BPO evolves over time, that we will see that gradual migration and adoption flourish here.
And it's consistent with a broader trend as well. In my sort of prior discussions with bankers in the region, corporates in the region, there is this kind of appreciation for the need to somehow align or be a bit more consistent with international practice in things like financial reporting, levels of transparency, in the way certain commercial practices evolve in the region to be, again, more aligned with some of the more accepted international practices. And I think that's all for the good in terms of that integration and sort of forward-looking approach that we're seeing in some of our discussions in the region here.
Alexander, David, thank you very much indeed for your time here. It's been very interesting hearing your views on the state of play of trade finance in Middle East and North Africa, and we look forward to reading about the findings of your research. Thank you both.
Thank you, Edward.
Thank you.
Thanks, David.
Thank you.